Do you hear the music? Yeah, that's Club Uranium. That's where the party is at. The DJ is spinning, the music is playing, the champagne is popping, the people laughing and dancing because they are making money. The uranium party is starting. But there's another commodity sector that is also just starting on the upside that offers tremendous possibilities. And nobody's talking about it. Nobody but us. Hey, I'm Danny Wilhelmi. I'm head of trading here at Bull Markets Lifestyle. This is Hot Trades of the Day, your daily show for swing trading ideas for the coming days and weeks. And let's jump right into it. This is the uranium, Sprott Physical Uranium ETF. And look at this pop yesterday. You could buy right on the open. Man, you are up. You are having a good time at Club Uranium. Clearly, the sentiment is changing. The Microsoft news, that was the one that is changing the momentum. And we know one thing about the uranium rallies. When they go, they effing go. So, this is not the end of it. This is the beginning. But because we shot up so much, there is a good chance that we're going to get a short pullback, probably smaller pullback. The gap we see right here, that is very likely a breakaway gap. I do not expect this gap to be closed. If it does, fantastic. I'm buying uranium stocks hand over fist, but I don't think it's going to get closed. Why? Because it is supported by the positive fundamental news from Microsoft and delayed from Kazakhstan and Russia, those obviously affecting the supply side. So therefore, breakaway gap, I do think we can go back to around 25.50 Canadian dollar, that is, here in the Sprott Physical Uranium. But that is the buying opportunity. Now, that's uranium. Let me take you to a sector in the commodity market that nobody is talking right now, but that is turning super bullish, and those are the grains. The grains are wheat, corn, soybeans. Look at soybeans right here. I've been recommending you buying soybeans for weeks. We first talked about it right here when soybeans hit the long-term uptrend. And let me, for the new people coming in, show you how far back this uptrend goes. Oh, we're not done here. Oh, we're not done here. Oh, here we go. This uptrend goes back all the way to 2001. That is a significant uptrend. Those trends don't break that easily, and obviously it did not this time. Instead, this happened. Midterm downtrend broken, short-term downtrend broken. That's actually when I recommended to get in. And look at this. It's going up. It looks great. It's basically a cup and handle formation, a bottoming formation. I don't care what you call it. It broke through it yesterday. Soybeans will go up. Pullbacks, short-term pullbacks should be used as buying opportunities. Look at corn. Corn had a spectacular pop. And the reason is we have record short positions of the hedge funds in the grain sector. And now the hedge funds are scrambling to close the short positions. And that makes the prices pop. Big pop. Now we have bullish consolidation. I'm showing it to you right here what the pattern usually looks like. A, B, C, consolidation pattern. So we got the A pattern, the green one right here. This is this pop. Now we're in the red one, the consolidation pattern. When we break above it, then the next uptrend starts. And you see this has a nice upside. The first price target is this blue resistance line that's at 461. And then the next one, this is this double resistance zone here at almost 500. So that gives us a beautiful upside. And on the downside, we would put the stop right here if it falls back in the downtrend. So if you're conservative, you're waiting for the break of this zone, you probably buy around 420. If you're a little more speculative, you will probably try to get in around 407, 406 with corn. This looks good. Wheat. No, not that wheat. That's not really listed in the commodities yet. Maybe at some point. Now we're talking about the wheat that goes in the bread and our beloved tortillas and everything. Look at this beautiful bottoming that we have right here. Look at it. It is fighting with this resistance zone. So it doesn't look as strong as the soybeans and corn, and that's why I listed here as the third option. Wheat is the biggest of the three markets. So that's the reason why it's holding back a little, because obviously that's where the hedge funds have the biggest position, because it's the biggest market and the most liquid. But clearly, we are making higher highs, we are making higher lows. This looks good as well. Also, coffee. I talked about coffee last week. I talked about it, I think we were here or here, one of these days, and I told you, use a short-term pullback to get in, which you could have even actually a little cheaper than when I recommended to get in. But doesn't matter, because you're already making money, you're already up. Perfect. This looks good. If we confirm this breakout above this horizontal zone and the upper band of the uptrend, there's power coming into coffee. Why is this horizontal yellow line important? Well, look at it. It comes from the all-time highs from 2022. So new all-time highs in coffee are happening as we speak. Bullish signal. Doesn't get more bullish than this. Easy money. And that is why I love the commodity sector right now. That's where the easy trading money is made. That is it for today. We'll talk tomorrow. I would like to point out, I'm going to do a video how to invest in the uranium sector with the different categories. Invest in uranium, in the producers, in the explorers, the percentages you should put on, what you need to watch out for, especially with uranium explorers. Lots of black sheeps in that sector. You really want to avoid that. I highly recommend to focus on the uranium producers or investment opportunities like the Sprott Uranium Trust or Yellowcake, and do not put a lot of money in the explorers. There are some real quality names, but there are also lots of black sheep. Anyway, that's it for today. Have a great trading day. All the best. See you tomorrow.